Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better understand how we're currently positioned. We're seeing a couple bumps in the road as of Monday, and then of course a rebound on Tuesday and a little bit of a sell-off on Wednesday. Rest assured, we're watching our indicators, our global tactical portfolio, all of our market trend indicators, and our relative strength ranking. Of course, a couple days of down does not signal any reversal of any trend, nor are we making any hysterical or emotional decisions. I can rest assure you that. We run a strict strategy. As I always tell my clients, and I tell all my TV and radio listeners, 2 to 5% movements up and down, month by month, quarter by quarter, in any investment strategy, in any investment category, is commonplace. It always has been. We're probably seeing a little bit more volatility just in this last week because of what happened in Boston. And of course, our hearts go out to all the family and friends and so on, the people that were injured or unfortunately killed in this severe situation. I hope that our government finds out who the perpetrators were and obviously deals with them appropriately. These are the things, unfortunately, that are commonplace before, and they're going to be commonplace now. And it's unfortunate that you have crazy people like this in the world, but you have to learn to live with it, and you're going to have to learn to deal with it, especially when it comes around investing. Again, I always tell investors, whether you're a conservative investor, whether you're a growth investor, you're going to see some volatility in a portfolio. I'll give you an example. I look at treasuries, one of the safest investments in the world, supposedly, still fluctuates in value. In fact, we've seen 2 to 5% movements in Treasury about 5 times in the last 4 months alone, meaning 5% up, 5% down, 6% down, or more. So at the end of the day, folks, conservative investments go up and down. Growth investments go up and down also. We run a strict strategy. We're not changing, of course, any of our global tactical portfolios currently because we've got a little bit of a fluctuation. We are watching our relative strength rankings closely, and we look at all of our market trend indicators extremely close every single day. And if a change is needed or we need to get more conservative, we will do that. We don't make emotional decisions. We make decisions based upon a strict strategy that's going to help guide our client portfolios on the upside and help reduce against severe downside, especially in a recession. Generally speaking, the economic indicators continue to improve. A lot of our sources that we pay for subscription services on recessionary calls, recessionary inputs, and the direction of the overall world economies still look like, generally speaking, they're improving slowly. Again, I call this the new normal. It could be the old normal that you saw 20, 30 years ago, but generally speaking, we're going to probably see about a 2% GDP growth this year. Investors, of course, always want more. At the end of the day, nothing goes straight up and nothing goes straight down. That's why relative strength investing works so effectively. It helps you protect against those major catastrophic downturns, which is typically these 20, 30, 40% downward tracks that you see in a lot of risk assets when things really get bad. I don't want to pick on gold too much, but I'm going to. I hate to tell my TV and radio listeners we were right, but of course we were right. We sold gold back in December 28th of 2012 because it fell out of our top 5 ranking for our global tactical strategy. It was getting relatively weak. And of course, over the last week alone, gold's down another 15%. You're probably glad we run a strict strategy, and you're probably glad as a client that we don't own gold. We don't base our decisions on emotion. I could care less if the government's printed a lot of money. At the end of the day, what counts is fact, not opinion. And fact is, gold's been getting relatively weak and weak and weak. And of course, it fell out of our top rankings because it's not relatively strong. So we sold it. And again, gold, I believe, ultimately will probably be headed lower. And unfortunately, the small investors who don't run an investment strategy or a discipline are probably still holding gold, and they're probably sad they did. Year to date, gold's down over 15%. Even worse, the gold mining stocks are down 30 to 50%. So imagine if you're an investor, you're buying based upon emotion, and you think gold only goes up. Guess what, folks? Gold also goes down. By doing a rotational strategy on relative strength, our strategy has been proven to protect against severe down markets and give upside potential and income. We're going to keep running our strategy. Rest assured, we're watching our strategy and all of our indicators extremely close. We're not making any knee-jerk reactions, nor should our clients. If you're not a client and you want to become a client and learn the benefits of Resny Wealth Management and why passive investing is outdated, ineffective, and unfortunately it didn't work in 2000 and it didn't work in 2008. That's why we run an effective relative strength strategy that rotates around the stronger, relatively stronger sectors. Sometimes that means going to cash or safe investments in order to protect our client's portfolio. Of course, if you're a client, you have a question, give the office a call. If you're not a client and you're realizing it's about time you became a client, give us a call. We always like taking on nice people to do business with. And of course, if you're a client and you have a referral, we appreciate your referrals and your business. Again, call our office if you have any questions. Have yourself a great and profitable